This is Roger Balzer of Balzer Wealth Management. Welcome to our 2-Minute Tuesday for July 1st of 2014. Our title this week is, Are You Selling Badly? One of the realities for a typical investor preparing for retirement is they do not have an unlimited time for their investments to work out. Take, for example, a 55-year-old investor with $500,000 in investable assets. Whether this investor earns a return of 4 or 8% on their portfolio over the next several decades is going to dramatically change their standard of living. Yet, I think few investors and their advisors have an appreciation for just how much variability there can be in the returns of different asset classes that commonly make up a diversified portfolio. For example, consider the variation in returns over the last couple of decades in U.S. stocks, commodities, bonds, and real estate, as shown in the slide here. The column to the far right highlights the difference between the best and worst performing decade for that asset class. There's no such thing as stability in the financial markets. Imagine how you and your advisor could use this information in managing your portfolios. Is your advisor using the same old tired buy and hold philosophy of selling the winners only to buy more of the losers? That may work out okay over a long period of time, but I think it's susceptible to the behavioral weaknesses of most investors. As Robert Wibbelsman said, the problem with a person who thinks he's a long-term investor and impervious to the short-term gyrations is that the emotion of fear and pain will eventually make him sell badly. Without a game plan for risk management, investors are setting themselves up to sell badly. However, with a tactical approach to asset allocation driven by relative strength, the odds of long-term investment success is improved over many alternative approaches. Most notably, the buy and hold most advisors are promoting. What you're looking at in this slide is basically the case for our tactical investing or trend following with trend adaptation. A trend following approach to asset allocation, it seeks to identify and overweight those asset classes that are in favor and to underweight those asset classes that are out of favor. I never worry about the top 20% and I never worry about the bottom 20%. If I can capture the middle 60%, it's fine with me. I also don't worry about selling the tops and don't worry about buying the bottoms. It can't be done except by people who tell you that they can, and I believe they're just liars. One of the developments over the past decade that has made a tactical approach to asset allocation even more accessible to you as an investor and me as an advisor is the expansion of the exchange traded fund or ETF universe. It includes a broad range of asset classes like U.S. equities, international equities, currencies, commodities, real estate, and fixed income. With all of these tools available to us, there is no reason for an investor ever to let the fear and pain and emotion eventually take over and make them sell badly. If you find these videos to be of value to you, I would highly recommend that you send this piece over to some of your friends and ask them to sign up for a 2-Minute Tuesday market update video on our website at www.balzerwealth.com. As always, remember that any of the securities mentioned in this video are not a recommendation to buy or sell, and also they do not represent specific recommendations of Balzer Wealth Management. If you're relying on a video for investment advice, you're making a big mistake. You should consult with your investment advisor before you make a decision to buy or sell any investment. And if you don't have an investment advisor, I'd encourage you to give me a call at 440-934-3114. Until next week, have a great 4th of July.